Welcome back to your personal finance classroom, where we break down your money questions to make it easy for you to live your best life. Don't forget to subscribe and hit that notification bell so you can be notified when new videos come out. And if you found this video helpful, don't forget to like it. Today's lesson is all about 7 ways to get started saving for a house. Step 1, know how much to save. When you're saving to buy a house, the most important thing to know first and foremost is how much you need to save. And this has 2 parts to it. 1, knowing how much you can afford, and 2, knowing how much you'll be putting down for your down payment. Determining how much you can afford is going to be unique to you and your financial situation. There are online calculators that will help you get to that number by using information like your household income, any debt you have, and the type of mortgage you want. Then, don't forget to factor in often overlooked costs like closing costs or other moving expenses. Closing costs are the fees that you pay to finalize your mortgage and are typically about 2 to 5% of the loan amount. Moving expenses can range from things like moving trucks, movers, boxes, to trips to the hardware store, new furniture, and any renovations. When you know how much you can afford, you can then determine how much money you'll put down. A down payment is the upfront cash you pay when getting a mortgage to buy a home. This can be as low as 3% depending on your mortgage type and lender. Just keep in mind that putting down anything less than 20% means you'll have to pay private mortgage insurance. Private mortgage insurance, or PMI, protects the lender and mortgage investor if you default on your loan. You can search online to find a down payment calculator to help you do the math there. For example, say you've determined that you can afford a $300,000 home and you want to put 5% down. Your down payment is going to be $15,000. But don't forget to add on things like closing costs. Closing costs at 3% means that that's another $9,000. Add the $15,000 and the $9,000 and it's going to be $24,000 to put down to get your home. Step 2, reevaluate your budget. At the end of the day, you want to be spending less than you make, and it's key to know where your money is going. This isn't one of those things where you have to sacrifice your daily latte to afford a home. Start by understanding how much money is coming into your household each month. This is after taxes, of course, so it doesn't work if you just divide your salary by 12. Instead, look at your last paycheck and double it to give you a good idea of what you make monthly on average. Then look at your expenses. Take note of how much money goes to necessities or non-negotiables, things like student loans, rent, bills, the things you can't really live without. Next, list out the non-essentials like restaurants, shopping trips, entertainment. Again, don't feel like you have to give up your daily latte if that gives you life every morning, but start to prioritize the non-essentials. What's actually worth it and what's become a bad habit, like ordering food out instead of grocery shopping or forgetting to do laundry and just buying a new outfit, start to cut out the costs that don't add value to your life. If you're struggling to prioritize, ask yourself if this purchase is worth putting off buying a house a little bit longer. Remember to be realistic with your budget so it's easy to stick with. Once you've determined how much is coming in and going out, do the math. Subtract the money going out from your monthly salary. What you're left with is the amount of money you can start saving for your down payment. So if you're bringing in $5,500 each month and your total expenses add up to $4,800, subtract the $4,800 from the $5,500, and that gives you $700 that you can put away towards your down payment. If you're not happy with the number that you come up with, revisit your non-essential expenses or consider where you can save more money. Is there an opportunity to save on car insurance? Can you refinance your student loans? There are plenty of possibilities to make room for saving. And pro budgeters tip, we recommend a tracking tool like mint.com to monitor your spending and simplify the process. It's free to use and pulls in all your transactions from your connected bank accounts and credit cards so you can easily see and categorize all of your income and purchases. Step 3, reduce your debt. Like 45 million Americans, you might have student loan debt, or maybe for you it's credit card debt, or both. Debt happens, but one of the best things you can do for your home ownership goal is to reduce your debt. It may seem counterintuitive to be focused on debt when you want to save for a home, but your debt to income ratio is something that lenders will take into account when they consider you for a mortgage. More debt can mean paying more in interest with a higher down payment. Making debt pay down a priority will pay off in the long run. And that money that you were making towards debt payments can then go to your down payment. It's win-win. Step 4 is make more money. We live in a world where you have options to bring in extra income that don't even require you to leave your home. A side hustle is a great way to bring in extra money. Consider your skills and where they fit into things like freelancing, starting a blog, opening an Etsy shop, or becoming a virtual assistant. Do some research and find the best option for you to make money from home. And if none of those are your thing, you can always pick up something in person, like photography, driving for a ride-sharing company, dog walking, or tutoring. One other often overlooked way to make extra money is to sell your stuff. The video game console you don't use anymore, the nice clothes gathering dust in the back of your closet, the exercise equipment that you just don't use anymore. You have options to sell your stuff online, from Facebook Marketplace and other local markets to selling your clothes at places like ThredUp or Poshmark. Or go old school and set up a yard sale. If you have things around that you just don't use anymore, you can sell them for extra cash. Make it a point for this income to go directly into your home savings. It's easy to spend more money when you're making more money, but keep your goal of homeownership in focus. Step 5, automate your savings. Life can get away from us sometimes. It's easy to forget to move money into your home savings fund on a regular basis, but automating your saving means you're saving without even having to think about it. Your home fund is growing on autopilot. It's easy to set up an automatic transfer in your online banking portal. Go back to step 2 for the specific amount you're planning to save and set it up so that amount of money moves from your checking account to your home savings fund on a specific day each month. Your home fund will steadily increase with virtually zero effort on your part. Step 6, put that savings into a money market account. On that note of automatic saving, consider an account that's going to do a little more for you when saving for a home. A money market account is an interest-bearing account at a bank or credit union, which means you deposit money into your money market account and earn interest on that money. This means your money is making money, which is another way to increase your home savings with little effort. Interest rates on money market accounts are variable and will rise and fall with inflation, but at the end of the day, it's doing a little more for you than a generic savings account. There are a lot of options out there for money market accounts. You can find an online one or go to your local bank or credit union to open one there. Do some research to find the money market account that fits your goals. Step 7 is to add extra money when you can. The quickest way to grow your home savings is to keep adding extra money when you have the opportunity to. If you get a raise, if you get a bonus, if you get a tax refund, even birthday money from your grandmother. Anytime extra money comes your way, funnel it directly towards your goals. So those are 7 ways to get started saving for a home. Tell us in the comments which step you think will be the easiest for you to accomplish. Don't forget to like and subscribe. We'll be back Wednesdays and Fridays with new personal finance lessons for you.